Well, our view generally at CBHC is that it's a very good budget. It's very positive. There's lots of good legislation there that favours small businesses at a time when they've been struggling, and small businesses, being the lifeblood of the economy that they are getting some really good benefits there at a time they need them most. Having said that, it is of course an election time. We've got an election coming up on May the 6th. It could be that we have another budget later in the year, and it may not be as generous, whoever the government may be at the time. So, we do need to be cautious, but there's certainly some good points there at CBHC we've been looking at, and we're keen to implement for a number of our clients. There's not been too many major changes to income tax legislation, really, apart from the fact that earnings between 100,000 and 150,000 a year, people's personal allowances are being eroded away. Also, of course, you've got the 50% tax rate starting to kick in now at 150,000 a year and above. And there's some restrictions on pension contribution relief for those earning 130,000 a year or more. From a tax point of view, probably the worst part of the budget was the national insurance increases. Well, that actually went up by, will go up by another 1% for both employee and employers' contribution from April next year. Now, they're big income generators, on average about £250 per person in terms of both employers' and employees' contribution. Now, that will take the employers' national insurance rate up to 13.8% and the employees' insurance rate up to 12%. So that's a big hike, and that's paying for a lot of the tax benefits that we're going to get this year. So bad news later on, I'm afraid. Some interesting developments in terms of the housing market with stamp duty. The new legislation that's coming that looks very interesting is the fact that for first-time buyers there'll be no stamp duty at all on properties purchased up to £250,000. That's quite significant, really. But with existing properties or non-first-time buyers, the rates will change there slightly. Some slight reductions there, but that's actually been funded by properties over £1 million, where the rates will actually go up from 4% to 5%, so it's actually being funded through the higher end of the market. But it's worth bearing in mind that a lot of those higher value properties may actually start increasing in value as a result of the first time buyers hopefully coming back into the market, so that may actually prove to be self-financing ultimately. It's been a very good budget for savers, actually, with the annual ISA allowance increasing from 7,200 to 10,200, and the fact that 50% of that can actually be held in cash. So that's good news. It's also scheduled to increase in line with the retail price index every year thereafter. So that's a big hike and a good encouragement for savers. Well, the increase in the annual investment allowance is very good news, actually, and the current level is 50,000 a year, which means that if you purchase an item of capital expenditure like plant and equipment or something like that, you get a full 100% tax relief on that in the year of purchase. Now, that's currently 50,000. That's going to increase to 100,000 with effect from the new tax year. So that really will stimulate investment, in my opinion. Once again, some pretty good news on the capital gains tax front, where many people were forecasting that the entrepreneurs relief, which was currently a £1 million per person lifetime allowance if they sold their business or the shares in a company, would attract tax at only 10%. Well, that's actually been increased to 2 million, so that's really good news. And a lot of people were actually forecasting that was going to be removed altogether. So we thought that's a good move forward. That will encourage people to reinvest in their businesses and perhaps defer taking salaries or dividends that would otherwise get hammered for the higher rates of taxation. So we think that's a good move. Some very interesting developments in terms of funding for SMEs, where the two main banks that are currently majority owned by the government, RBS and Lloyds TSB, or Lloyds Banking Group in fact, are being obliged to lend a good deal more to those types of customers. As an example, the targets given was that both banks need in total to lend up to 94 billion compared to last year's actual numbers of 38 billion, so a sharp increase there. Of course, the normal criteria will apply there in that those banks or those companies will need to have good quality business plans and forecasts to support those lending applications. So we do see that as being a positive step. Of course, also the government has kept in the Enterprise Finance Guarantee Scheme, which allows smaller businesses to raise funds of up to £1 million by way of debt funding, where the government actually underwrites 75% of the amount borrowed. So again, an extension of that, a good sign for small business. Another interesting development is that where businesses have been turned down in terms of credit applications by banks, the government has set up a small business credit adjudicator body that will actually look into those applications to make sure if the reasons for turning that company down or that business down were valid. So there is a right of redress there, and I guess it's one way of making sure that the banks do implement the lending criteria or the lending targets that the government has set on them. Well, the government have introduced a growth capital fund, which is with a £500 million investment, is set up to try and enable businesses to raise funds where perhaps conventional bank lending or normal sort of equity lending or investment is out of the question. It's a bit like a throwback to the 70s when the Investors in Industry, which later became 3i, was established. It's a bit like that, and it's serving that sort of purpose. In addition to that, £2.5 billion has been set aside to allow for business training and development as a sort of grant fund there for businesses that want to move their businesses forward in those sort of areas where they need more training and skills to do so. It would appear that with small businesses that get involved in government contracts, there's a great boost there in that it's been laid down that 15% of all contracts that get put out by government bodies have to be awarded to small businesses as a minimum. But also there's a target that 80% of all invoices will be paid by government departments within 5 working days. Now that is a major cash inflow for a number of businesses. The time to pay scheme allows businesses to take longer to pay their tax bills and to ease cash flow difficulties, and has to be pre-agreed within the revenue. The good news there is that that's actually been extended until the next Parliament, so that legislation will carry on indefinitely for the time being, which is a good boost, because a lot of people forecast that would soon stop, and they'd have to catch up on their tax bills much more sooner than would otherwise be the case.